I want to take a look at that broad economic picture first, where we've had governments proposing a 4.2 trillion naira budget for 2011. Overall reaction to that announcement that was made yesterday?
Quick reaction, Alicia. First issue is that Nigeria's budgeting process still continues to suffer the same problems that we've had for the last 10 years. The ratio of recurrent to capital expenditure has been huge. And that is a problem for the structure of the economy. And it continues to fund the sort of inflationary fears that were expressed by the central bank governor a while ago. The reality is that when you actually look at budget performance as well, every year in the last 10 years, we've always overshot the recurrent expenditure from an actual point of view, whereas capital expenditure has averaged about 50%. And capital expenditure is what is actually required to ensure that the country is able to go on some form of sustainable growth trajectory. So the reality is that, look, we still continue to have the same budgeting process that ensures that we can't manage inflation in a very sensible way. That will continue to be a problem for the central bank, especially in an election year, which you expect would have actually a lot of extra budgetary spending. The numbers are going to get higher once it gets to the House and the Senate, when numbers start to drill down. And for us, that portends significant inflation fears for Nigeria in 2011.
That having been said, we are looking at an assumed oil price of $62 a barrel, where the price was set at $67 a barrel earlier this year. So budgeting on a more conservative oil price assumption, some saying, may restore some faith in Nigeria's strong reform credentials specifically. How are you reading that picture?
Well, you know, Alicia, the reality has been that on market of oil and the budget price hasn't exactly translated to much in terms of actual savings for the economy. The only time we've actually seen a huge saving was when President Obasanjo started to build up excess crude account. There is no excess crude account at the moment because it isn't constitutional. There needs to be a process that makes that saving constitutional. And then I think that there's also an accounting issue with the way Nigeria has been accounting for revenues, which is why consistently, especially this year, revenues continue to fall short of the sort of budget expectations that government was expecting at the beginning of the year. The key issue for us is that going forward, we've got to be more realistic about our expectations in terms of revenues from the government point of view. Taxes are going to suffer again in 2011 because people just don't have money in their pockets, and corporates as well are not exactly shooting out the lights from a performance point of view. So I think that for the Nigerian economy, austere times like this means that it's important for us to continue to look at the structure of the economy and look at the structure of government spending. Government spending should be focused more on building a long-lasting infrastructure base for the economy. And when that happens, then government can start to look at perhaps some increased revenue from the rest of the economy, including taxes and other custom duties and other revenue sources. So there are several issues that need to come to fore as we continue to look at the 2011 budget. But in terms of level of performance of 2010, then it doesn't really give you that much hope for 2011 as well.
While that's playing out on the economic front, we've had some company news filtering through as well. A Greek Coke bottler, Coca-Cola Hellenic, plans to buy out the Nigerian bottling company and turn it to a wholly owned subsidiary, that in a $126 million deal. Initial reaction to that announcement?
Well, an interesting development, but I think that what we've seen is basically a strategic move by Coca-Cola. Coca-Cola continues to want to own its own businesses. Don't forget that the reason why Nigerian Bottling Company anyways in the first place became a Nigerian-owned company, if you could call it that, was because of the indigenization decree in the late 70s. Companies like Coca-Cola want to be the key drivers of the business, and they want to own those businesses 100%. And that is a strategic move. I don't think that economics has played a significant role in that transaction as a whole. However, I think the Nigerian shareholders would find the transaction interesting with the sort of premiums being proposed.
What we're looking at there, Femi, is a 37.4% premium here. And this for a company where profit margins have been eroded in recent years as a result of competition, right?
Absolutely. So I think the Nigerian shareholders would look at that, with some level of excitement, especially given the sort of performance that we've had for the company in the last 2-3 years. There's extreme competition in that space, and the competition is getting better. So the reality is that for the Nigerian shareholders, it just might be a time to cash out and look for investments in other more efficient businesses. I still think that the FMCG sector is key for 2011, and perhaps a reappraisal of people's portfolios would be necessary if you're holding NBC.
Let's shift focus very quickly to the banking sector. We've heard that Nigeria State Asset Management is on track to buy all bad bank loans by the end of December and recapitalize the 9 lenders rescued last year by the second quarter of next year. How are you playing the banking space right now, Femi?
Banking, I'm still very cautious, and Alishia, it's basically driven by the fact that even if those banks were to recapitalize, I still continue to focus on fundamentals for the sector. I think in the last 5 years, the banking sector has been overbought. There's been a lot of positive sentiment around that sector that drove prices to ridiculous levels. I think what we're going to see in 2011 is a realignment of the banking sector. That divergence that we saw in 2008 and 2009 will continue in 2011, whereas people will look at the banks that continue to provide strong, consistent performance and price them, relatively more expensive than they would price the laggards. So I'll still be cautious. I'll continue to play in the higher end of the market. Quality becomes very important, not just asset quality, but also earnings quality going into 2011. And I think that for the banking sector or financial services as a whole, fundamentals start to play a more significant role in 2011 than technicals.